You are listening to chartingwealth.com for Friday, the 1st of May 2015. Well, April has ended with an interesting downturn. Now, we know, if you've been listening to the show at all for the last several weeks, you know that the month of April typically ends our good 6 months, and you have heard the tale. I'm sure you've heard the saying, sell in May and go away. Why do we say that in the market? Because the big money tends to leave the market in the summertime. Why? People go on vacation. They take their money out. The big managers are maybe traveling Europe. I don't know. But look at what we see happening in the overall market now. This is not a 4-hour chart. This is the 2-day chart that turned over this fast. Look at that crossing going down. We see the crossing going up back on the 14th. And it trundled up, a little digestion here, and then up the last 3 candles. These are 2-day candles. And this 2-day candle, look at all that down movement. The bulls were able to push it up, but the bears brought it way down. Here's where we ended 2 days on Thursday. Crossover going down. We still don't have the derivative oscillator crossing over, but we do have a lot of downward pressure. Let's look at our 4-hour chart. Again, this is the overall market, IYY, the total market. We can see nice move over going down on the 28th. We had some hesitation here, but we saw crossing over back on Wednesday, breaking. This is our 2-day trend line and the continued strong down moves. So that is where the total market is. Let's go back out to the 2-day and let's go to SPY, Standard & Poor's 500. What do you see here? You see the same kind of movement, not yet a crossover going down on the 2-day chart, not as strong as the overall market, but you do see a lot of downward pressure. Let's look at the 4-hour chart. What do we see there? Same thing. We saw it crossing over going down back on the 29th, and actually happened back on the 28th, actually, and confirmed over there on the morning of the 29th and continued down movement, substantial and strong. You had the crossover right about the same time the derivative oscillator flipped. And again, that's the 2-day trend line crossing over on that. All the triggers telling you that that move is ending. Okay, now let's go back out to the 2-day chart. Let's look at what the Qs is doing. What is technology? The NASDAQ 100? Well, here's the 3 2-day candles up until the last couple of days, Wednesday and Thursday, and look at what you see happening. You again see the same kind of movement, not as converging as the other two. If you remember, IYY total market's already crossed over. The S&P has gotten much closer than this, derivative oscillator moving down, but we still don't have a crossover going down yet. We do have the 2-day trend line violated. Let's look at the 4-hour chart and see what we see. Same kind of thing, lots of strong down movement. Once we saw the break in here, then you saw the crossover here on the 29th, and there is strong movement pushing the market down. What a way for April to end and May to begin. Now, let's range out and see what our friend gold is doing. What do you think gold's done? Look at that on the 2-day chart. Now, do you see this? This is across a doji. Lots and lots and lots of indecision. Look at, this is the candle all the way back, 2-day candle back on the 6th and 7th. Look, we have never had it go above that, much less where the wick went. And again, when we see wicks, that means that the bulls were able to drive it this high, the bears brought it down. This is where it closed out. Now look at this. We have a doji here, downward movement, upward movement, and now another doji. We still have never had, look at this, we have never had, and this is part of the problem with the MACD. The few problems you have when you have a sideways market, it's hard to get the MACD to tell you a lot. The derivative oscillator, we don't count on that for much. That's showing down movements and actually an acceleration of the down movement. Doji means lots and lots of indecision. Think about it. The bulls were able to drive the market this high. The bears brought it this low. They settled in the middle and nobody did anything. And this is still well within this candle all the way back on the 6th. When you don't have a lot of drive, Gold is just sort of hanging out right there. So what do? You just watch. You just can't tell what it's doing. Now here's what it did on the 4-hour chart. Again, you can see where it ticked up from the 27th and then ticked back down. But look at that. It's holding right there at where the opening was back on the 27th at noon. So very interesting, very interesting. What's gold doing? Who knows? You can see up movement here on the 4-hour, down movement here. Again, it's tough. It's all staying within a very close range. Although the range is spreading, whenever you see these Bollinger Bands widening, these are volatility bands. You can tell that things are pushing out. So where are we right now? With gold, we don't know. With the Qs, the SPY, and again, NASDAQ 100, SPY is the S&P 500, and the IYY is the total market. Where are we right now? Well, the total market is moving over, going down. Does that make us feel really good coming into May? Not necessarily, because the market starts losing volume. And when it does, it's hard to do good trades. We're going to still keep charting. You keep charting. Let's see what we can find, what shows its head to us, and where we might be able to find good points of entry. And again, we're all about educating. We are not a stock calling service. We don't do anything but educate. We do not give advice. We simply ask you to learn how these charts work, explore them on your own, and make your own decisions. That's chartingwealth.com. Please go to our website. Sign up to get our email every day. Follow us on Twitter and Facebook. Thank you. God bless. Great investing. We wish you.